What is going on, everybody? In this video, we're providing you a state of the market and stock picks for May 2nd, 2023. So that sounds like something you're interested in. Consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, pretty sideways day-ish for the most part. We are starting to break down more towards the back half of the end of the day. There's a lot of news that is occurring, and we got a huge week on deck coming up. But to get us started, go ahead and smash that like button so that we can get this video out there to kind of forewarn people out there what is currently going on. Now, leading up to this point, I have stated over the past probably about month, it's been a little over a month now since SVB collapse. Now, I stated that we are essentially in the final stage of how this thing is going to play out. We have since moved on from inflation, although inflation is a big problem still, and will continue to be a problem moving forward. As far as the market is concerned, the market is more so looking at potentially recession. That is the one thing that I think could change the dynamic of the market and cause more fear to come back. If not for that, then I think the market would almost go back to its essentially regular scheduled program and continue to push back up despite inflation. Now, inflation can again wreak havoc if it starts pushing up and essentially create other potential issues. But ultimately, what we have seen and why I changed into that final stage is essentially because of the fact that we have banks essentially failing. And ultimately, we're continuing to see that right today or last week, right after SVB. First Republic essentially was essentially saved by a couple other bigger banks with a $30 billion deposit. Now, that particular bank has been drawn out till earnings where they couldn't hide it any further. And essentially last week was scrambling to try to get some sort of deal done because the Fed was essentially not going to bail them out. They came really close to bailing them out, but essentially ultimately what happened is this morning we found out that JPM would essentially be absorbing what they could from it and essentially had a very, very good deal on top of everything. Despite all the negative, essentially all the negative parts of First Republic. So, being said, we lost another bank. It's another bank failure. The market is still holding like nothing is wrong. Now, coming into this week, this is, in my opinion, the last week of really impactful earnings. Aside from that, yes, earnings continue on for the remainder of the quarter, but the market essentially makes up decision after all of the industry leaders have essentially disclosed their earnings. This is also, again, a big reason why I really watch earnings because all the other data really does not matter. And over the past week, right, over the past couple of days, Elon had come out essentially saying that, because you could essentially almost call him the front line essentially economist because he's the one that has he runs multiple big companies in different industries, and he's essentially can tell you what he's been seeing, and he has stated that he sees a mild recession going on. Now, this quarter, there's no such thing as a mild recession. Nonetheless, again, he can't go out and just say a recession because that's going to again draw panic. Now, we've had the Fed come out and talk about panic, or the Fed come out and talk about mild recession in their last report that came out. They haven't actually said it yet. They've avoided that question. The question is on Wednesday, are they going to actually disclose that we are in a mild recession? Because then that could potentially draw panic. But rightfully so, everything is scheduled perfectly for this week, as we do have the new rate increase on Wednesday. Which again is very heavily weighted to a 25-point basis move because inflation is still at 5. And then you also have Powell coming on. Now, is Powell going to say that we're going to have a mild recession is what's really to watch on Wednesday. And then Thursday, we have after close, we're going to have Apple earnings, which holds a huge part of the index. So if Apple does poorly, it could start dragging down the whole index. And as what we've seen up to this point is basically all earnings have been pretty much trash. Now, you have had Microsoft, you have had Meta and you have had Amazon, which reported good compared to their essentially dirt expectations. But we do notice that the cloud service area is doing very well, right? Because of ChatGPT, because of services in general, people are still trying to do as much as they can, and a lot of people are still working remote. So a lot of these things really matter, and so there has been a very up. Aside from yes, food and housing and energy, right? They have been doing very well. Any kind of cloud services has been doing well in this current environment. So, with all that being said, in talking about this final stage, we are really looking at a recession. We are trying to depict a recession. Now, we've got a lot of really negative data coming up to this point. We are starting to see some positive data, which is very misleading. Ultimately, what we're watching for is data on jobs, right? And we have a big jobs report coming up. Now, is that going to tell us or start reflecting what is truly going on with jobs? Because jobs have been sinking pretty heavily over the past couple of reports. Again, there's a lot of essential tampering, if you will, with the jobs report, and so can lead to a lot of misleading information when what's really going on. Right, people are still suffering, and you're still hearing stories about people getting laid off and savings being drained, still at all-time low, credit cards being essentially increased. Now, again, the big concern why there's a lot of people stating essentially that Q2, Q3 are going to be really bad, potentially even Q4. I think Q3 could be the worst of everything, that we kind of see this whole thing play out. And again, we're looking really for the normalization, and I was expecting it to occur at some point here in Q2. Again, you'll start really seeing it more so when we get into the Q2 earnings. And then you'll see probably the worst of it in Q3, which we reported in Q4. So you have to again understand all this delayed information you're getting is very delayed. That's why you have to go off of someone like Elon, who's essentially telling you right now that he's seeing it already. He's seeing a very mild recession, and so. Again, no thing is mild recession, so he's seeing it impact his businesses, and then the question is when is that going to reflect on all the other data that's out there, and then when do we price that in? Again, the key things you have to be watching here in this final stage is we are watching recession numbers, we're watching bank collapses, right? It seems like every 15 days there's another bank collapse, and so the question is the Fed hasn't started laying off rates, and then the next thing that they can essentially push is a more of a credit crunch, which we are starting to see credit lines disappearing, right? And I understand that they are trying to stop that to ultimately force people to have to use all their savings, or force people to have to sell their homes, right? And understand that that's the one piece of wealth that families have is their home, and then understand that housing has started ticking back up a little bit. So you have seen some influx in housing. I know a lot of people talk about a housing crash. We'll see. Ultimately, what we are missing is, again, there's still a lot of people are essentially price gouging right now for homes because the supply is very limited as of right now. But again, you do have something that has been pushed out with the administration, with the credit score being low. More people can qualify or get incentives to qualify to help them get qualified for a home. So is this going to lead us to a potential corporation like BlackRock trying to essentially flood the market with new supply of homes? And then especially with the new buyers out there, but understand that again, people are still getting laid off, right? When is that going to start reflecting on other industries aside from just tech? And so that is one of the biggest things that we are currently seeing. So as of right now, again, this final stage is very delicate, as it will take a couple ultimately up to Q3. I think we want this normalization to occur as quick as possible so that you could potentially get into more of a boom cycle. Right now, you couldn't get into a boom cycle because things are just too overpriced, and people are you won't get into a boom cycle until the Feds start cutting. And right now, nothing is broken enough for the Feds to start cutting. Nothing is reflecting that. And so, again, going off of what their numbers are, again, very delayed. Nothing is reflecting for them to start cutting until the Fed stop, pause, and start cutting. Will that likely happen? And so to think that we're just going to pivot out of here, we're still in earnings mode, like I said, for at least the remainder of this week. And then after this week, uh, we'll have the new interest rates. We'll have whatever Powell's going to say, whether that's recession or not. We'll have Apple earnings, and then we'll have the non-farms and go from there. And then realize next week we do have the new core. And what will the new core bring? And so, again, there's a lot of things that can add up, and understand that you are on a very you're walking on eggshells, right? Because this continued rates are still impacting the banks. Again, the two biggest things that are going to have huge impacts on rate increases are banks, because of the bonds, and then you're also going to have the housing industry and rates for people purchasing homes. Now, again, there could be an uptick because in a normal cycle in housing, this is normally, it starts, the whole springtime period is a very hot period for houses. You have to understand we are starting getting that period, so we are starting to see a huge uptick for that. That lasts till about June. So we got about another month of that potentially pushing, and why it's pushing. But the ultimate question is after June, does that how high do we actually go up? Especially if we increase another 25 points, that's going to be added to June, and then go from that point. And so, again, there's a lot of different things that are occurring that if you want to continue to push this can down the road in hopes that inflation comes down, it's just not going to come down if people are out there still buying. And again, you have, again, the concern about the whole dollar. Again, that whole situation would take a lot of time to play out for it to actually occur. So, but with that being said, we will go into technicals. As far as earnings tomorrow, again, there is not really a lot of earnings that I am watching. Tomorrow is Uber. That's a good one to watch tomorrow. I can see what happens with Uber. Uber's doing very well. Pfizer tomorrow. BP is in the morning. So you got a lot of ones that you're going to see potentially a lot of weakness again. AMD is tomorrow after the close. So is Ford. So those be interesting ones to watch. CVS on Wednesday. Qualcomm on Wednesday after the close. And you got Datadog open this up in Moderna on Thursday morning. And then Thursday close, like I said, the big one is Apple, Shopify, Block, Coin, DraftKings, Lyft. Those are all Thursday evening, and then AMC on Friday. Again, biggest one we are watching. We want to see what Apple is essentially going to be reporting. And so that's, again, is what is concerning. Again, the biggest reason therefore is China and what's been going on with China. And the delay that's been going on there with everything in the closures. And we saw how it's impacted Tesla. How much is it going to actually impact Apple is the question. Again, they don't got clouds. It's pretty much based off of sales. So we'll see what does happen there. But now, as far as schedule, tomorrow the Fed will be meeting tomorrow, but we won't actually get rates until Wednesday. So just be mindful of that. But as far as tomorrow's schedule, we don't really have anything foreseen yet. So just keep that. Let me double check here. We do have the jobs JOLTS number in the morning. That's at 10 a.m. That can definitely have an impact on the market. That's pretty much all we got as far as what we have on the calendar. Like I said, the big stuff is not going to come until Wednesday, when we're going to get the actual rates at 2:00, and then we'll have Powell at 2:30 Eastern Standard Time on Wednesday. So that's kind of what we're aiming up for. And something I've always stated too is going into a big event like this, the market will try to run, and considering we're still in earnings mode, it'll try to run until it gets to that point. Now, again, it could run all the way up to Powell, right? It could run up to 25. We're expecting 25, so the market really doesn't care about what's actually going to happen, more so the impactful move. Now, unless for some reason we pause, that would be completely different. That would be unexpected. So just understand that if it's something that's unexpected that happens on essentially Wednesday at that 2:00, yes, then there will be a big move based off of what happens there. If they pause, the market could potentially run, but again, it's really going to dictate what Powell says. Now, if Powell talks about a recession, then the market's going to have to price that in. That's not priced in at this point, in my opinion. And so we'll see. We'll see what he says there. And then again, Apple, you have Apple earnings and then non-farm. So you got a couple big players, depending on what happens from Powell, depending on what happens from Apple could feed into either direction and what Powell says. And then ultimately non-farms could also add on to whatever direction that we go. If we get a Powell saying a recession, Apple does bad. And then essentially on Friday, you had non-farms come in at, some sticker shock way below expectations, absolutely just crush the market. Then that would be your three dominoes that lined up, that your three gooses or ducks that lined up, and essentially would cause us to sell pretty heavy. But again, ultimately after this week, I think we will start seeing what the true move is, and not this. We won't be stuck in this earnings mode anymore. Again, earnings mode is just for essentially the all the industry leaders, and then once after the industry leaders are reported, the market kind of just goes from there. So again, we'll see what happens there. But as far as technical wise, that 4,200 is something I've been talking about. If you want the market to be bullish, it needs to push over that. Again, I don't see that happening. You're going to have a lot of things line up, maybe a pause, maybe good Apple earnings, maybe a jobs report that's still showing that things are good and dandy. Then I could see us potentially breaking up and then going to the next level up, which is the 4,300. Again, you had a very parabolic move here. Again, I don't like this because that normally just means that this is going to get corrected pretty quickly, fill this gap down here. And then, like I said, ultimately, I think we're going back down to 3,800 if everything lines up. And then, again, timing of events could dictate other things. So we'll see on there tomorrow. We want to still try to hold roughly the 41.57. So depending on how we open, I think we're going to stay in between this range until we get Powell on Wednesday. Again, there's no big event coming into tomorrow, so I wouldn't be surprised if we just chop in this area into Wednesday before we ultimately determine what happens. Again, if there's an event can drop at any time as well. So again, just be mindful of that. If it does drop, that will affect the market. Now let's look at Bitcoin. Hard rejection here. Again, I don't think this is breaking out. We start getting recession talk, this thing's going to come crashing down, in my opinion. But again, we'll see what happens with that. It needs to break the 3K. Otherwise, support's around that 24K mark. It hasn't really retested that, so you could get a nice bounce off that. But again, it all depends on timing and what's going on there. No need going over the dollar. We'll look at Tesla. Tesla, again, hard rejection. We'll see if this thing could break the 166. If not, like I said, if we start pricing a recession, again, you have to understand that tech is going to sell first. Tech is normally the huge one that sells off quickly. Again, I expect it to fill this gap at least down to the 140. Down here is still debatable. It depends on how heavy the selling is. If we price in a recession, it very well could. Again, that could lead in a lot of cascading things. We get more bank failures. We get more layoffs from other industries aside from just tech. Could be very concerning. And I think that's what's kind of held up the market is there hasn't been a lot of layoffs outside of tech. So people have kind of been, I guess people probably see tech as being this very bloated industry that needed to trim a lot of fat. So we'll see what happens there. PLTR, again, this is one I want to watch for going into this potential dip. It is currently holding roughly the 770. It's been holding that pretty tight. If it does break down to the next level, I am watching the 721, but ultimately I really like it down here at the 6, roughly around the 6 here at 620. It's kind of what I'm looking at. It is pretty hard ceiling here at the $9. So we'll see what happens there. Again, all depicting, I think, again, once we finish out this week, we'll definitely have a direction on where we're going. So kind of just waiting for the week to play out. Whatever events happen during this week, we know what the ones already scheduled. The big question is also whatever other potential events that could occur throughout the week. So just keep that in mind. BA, again, this thing probably has not moved. Of course it hasn't. It's waiting on the market, still waiting for 220, still holding the 195. We'll see what's going on with there. Garbage company, in my opinion, but if it's backed by the government, it's going to stay afloat. JPM, obviously, jetted up this morning because of First Republic. We'll see if it can break the 145. Again, I think it's just kind of hovering around the zone till it figures out what's going on with Powell. Could get a little bit of a breakup, but I'm expecting it to fill this gap and this gap at some point. When that will be, who knows? I think that won't take place at least until after this week, till we know, and then go from there. So we'll see what happens. Again, the mixed signals don't help. The market gets pretty confused. Goldman Sachs got rejected hard here at the 140 or the 346. Expect this to come back down to the 324. Again, if it starts getting fuel to the downside, this thing could really start going nuts to the downside. Again, Bank of America, not any better. It can't break this floor here, or this new resistance, essentially the $30 mark. So get rejected hard. We'll see if this thing starts selling off. Again, if the bank starts selling and getting worries and concerns there, it can be a huge red flag just for the market in general. So with that being said, I don't want to make this too much longer. There isn't anything that is really going on aside from the First Republic stuff. Now that that's been extinguished, we are looking for the next bank. What will be the next bank? What will be the next big thing? Maybe Powell talking about recession is kind of what I'm looking for there. Any recessionary numbers, non-farms, I'm looking for sticker shock there, with a huge drop and showing massive unemployments or a huge spike. Or the kind of things I'm watching for. Those recessionary numbers is really what I'm looking at. So again, it's very misconstrued in the way they do that data. So again, that may be heavily manipulated, but again, you have your lead indicator, which is Elon Musk telling you that we are in a mild recession. So how long that plays out before it starts showing in the true numbers, or these numbers that were given, we'll see when that happens. So if you made this far, I appreciate it. Go ahead and drop a like, and until next time, I'll see you guys later.